In the world of finance, there are moments of intense action. April 9th was one of those moments. Oil prices plunged, and markets surged. The Dow floated upwards over 1,300 points. The S&P 500 and Nasdaq also saw impressive gains. All of this happened while uncertainty loomed large. A ceasefire between the US and Iran sparked this market frenzy. The announcement, made by President Trump, was unexpected. Traders hoped for a resolution as they bet on a trend. What resulted was known as the taco trade. The taco trade stands for, "Trump always chickens out." This phrase emerged from past patterns of behavior in the markets. Investors recalled instances where Trump backed away from high-stakes situations. Over time, this became a core trading strategy. When urgent ultimatums arose, traders positioned themselves in anticipation of a climb down. The Iran situation tested their thesis sharply. Would this time be any different? Investors placed bets, and the market reacted swiftly to the ceasefire news, confirming their strategy. Airlines and industrials surged, quickly reaping benefits. Lower oil prices transformed the industry's economics. Tech stocks soared too, influenced by decreased energy costs. Conversely, major oil companies faced declines, reflecting a shift in market sentiment. Yet, beyond the chaos, the ceasefire's terms were ambiguous. Trump called for unrestricted navigation through the Strait of Hormuz, but Iran's response was far less clear. This discrepancy confused traders. Oil prices remained high, and uncertainty persisted. The structural problems faced by the energy sector didn't vanish overnight. Gas prices rose significantly despite the ceasefire. Global inflation forecasts remained troubling. The Federal Reserve faced tough choices, indicating weeks of uncertainty ahead. The ceasefire itself felt fragile. The conditions set for future negotiations were fundamentally different. Iran expressed demands that clashed sharply with US expectations. Analysts agreed that the situation was delicately balanced and did not guarantee stability. As the clock ticked down, questions lingered. Would the relief rally hold? Could the ceasefire really lead to lasting peace? Meanwhile, hundreds of ships remained in limbo, waiting for clearer sailing conditions. Historically, markets are quick to price in hope. April 9th's rally was a reflection of that tendency. If the talks in Islamabad yield positive results, investors may rejoice. Yet, we must remain cautious about jumping to conclusions. In the end, markets desire resolution. But they often chase after it before it truly arrives. The taco trade illustrates this dynamic well. It serves as a reminder that, in finance, hope often drives the narrative until faced with reality. Keep an eye on the situation. The future of the Strait of Hormuz is intertwined with trading decisions. Understanding these dynamics can position you favorably in unpredictable markets.